Greetings, fellow investors. If you own utilities, telecoms, master limited partnerships, or any other dividend-paying stocks, as I do, you've no doubt noticed prices have been coming down a bit. And chances are you've heard some of the popular explanations for the sell-off. A future interest rate increase by the U.S. Federal Reserve. The big drop in oil prices from over $100 a barrel last summer to barely $40 now. The soaring U.S. dollar that's wrecked emerging markets like Brazil and hit stocks hard in developed countries like Canada and the nations of the European Union. Others worry about weaker than expected corporate earnings, declining market breadth, global deflation, and the advanced age of Wall Street's bull market, now improbably entering its 7th year. Recently, I hosted an 8-hour online chat with subscribers of my advisory, Conrad's Utility Investor, and almost everybody was concerned about what was happening to their utilities, MLPs, and other dividend-paying stocks. Some were ready to buy aggressively. Others wondered if they should simply unload everything now and return to the market when the storm blows over. Anyone who's invested in stocks for more than a cycle knows volatility comes with the territory. What separates successful from less than successful investors is how you react to it. I've found I'm almost always better off sticking with core positions in healthy, growing, dividend-paying companies. But as this bull market has aged, so has volatility increased. And I've been able to juice up returns for readers several times by betting successfully against the crowd. In early 2014, I was almost alone recommending utility stocks when the consensus was rising interest rates and solar energy growth would throw them for big losses. Then, as utilities became Wall Street's top-performing sector last year, many investors lost their fear, and their buying stampede enabled us to take big profits on several overheated stocks in the Conrad's Utility Investor portfolios, including Scana and Windstream Holdings. Now that things have cooled off a bit, I'm laying plans to get back on offense again with my dream buy strategy. I fully expect the action to get crazier still for dividend-paying stocks in the next few months. But the wilder it gets, the more profitable my dream buy strategy will be. And thanks to the extensive analysis I do every month on 214 essential service stocks, I've been able to highlight the best for readers. Now, I've identified low points these stocks could realistically hit during this market cycle, and that would lock in windfall gains for any investor entering at those dream buy prices. My recommended tactic is the buy limit order. A standard market buy order gets you in at the current price. A buy limit order, in contrast, is executed only when your price is reached. You can always just wait for your dream buy price and then make the trade manually. Using a buy limit order, however, makes it automatic. There are no emotions to overcome buying into what's likely to be massive selling momentum, and buy limit orders require you to keep cash on hand to execute trades. Always a good idea in a latter stage bull market like this one. Waiting for a stock to hit your dream price will take patience. In fact, if you set prices too aggressively, odds are they won't be reached at all, even when the overall market takes a sharp tumble. There's also the risk a company that appears to be best in class will buckle under the pressure of a real bear market, limiting its chance of recovery. That's why it's critical to make sure your targets stay best in class, just like any stock you already own. But every best in class stock you buy now, at the dream price, locks in a future windfall gain. And that's how real wealth will be built from the bear market in our future. Do I have your interest? Subscribe to Conrad's Utility Investor and check out my Roundup report, Playing Offense and Defense, now posted on my website and featuring dream buy targets for 38 best-in-class, high-yielding utilities, telecom, water, and energy companies. Thank you very much for your time. And here's to making the most of what the market gives us, come what may.